The HBR rich list has been one of the most requested and most elusive pieces of data in the entire Hedera community. And I get why. XRP has clean, precise, publicly maintained percentile thresholds on XRP scans. XLM has imawhale.com with daily updated tier breakdowns. HBAR has been messier, harder to pin down, with different sources giving different numbers, a lot of community estimates floating around, and almost no single place that pulls it together cleanly. Until recently, there's actually a website dedicated specifically to this, HBARrichlist.com. And in March of this year, fresh percentile data circulated through the community, sourced from on-chain analysis, that gave us the two most important numbers for this conversation. Top 10% of all HBR wallets requires holding 1,200 HBR or more. Top 1% requires 30,000 HBR or more. We're going to break those numbers down completely today. What they actually mean in dollar terms right now. What they'd mean at previous price highs where you most likely sit. And why the gap between those two thresholds is one of the most interesting stories in HBR's distribution data. But first, let me give you the full verified context for those numbers, because the context matters more than the raw figures. HBAR is trading at around $0.092 right now. Total circulating supply is approximately 43 billion tokens out of a fixed maximum of 50 billion that can never be exceeded or inflated. The network has approximately 9.78 million total accounts created. And here's the number that immediately frames everything that follows. Of those 9.78 million accounts, the estimated number of daily active wallets on any given day is somewhere between 2,069 and 18,000. Between 2,000 and 18,000 active wallets out of almost 10 million total accounts. That gap is the reason the top 10% threshold is 1,200 HBAR rather than something dramatically higher. When 99.8 to 99.98% of HBR accounts are dormant on any given day, the coin count sitting in the 1,222,000 wallets that represent the top 10% of all addresses doesn't need to be enormous to clear the threshold. Most of those 9.78 million accounts hold trivial amounts, received during airdrops, exchange signups, promotional campaigns, or simple early curiosity buys that were never added to. 1,200 HBR at current prices is $110.76. The top 10% of HBR holders are holding positions worth roughly $111 or more at today's price. Let that sink in. That's not a knock on the community. It's an honest representation of how early this network's retail adoption actually is. Before we continue, let's talk about GC-Rig, Global Cash Recycle Investment Group, because this one is actually pretty interesting when you break it down. At its core, this is all about one big idea: moving money smarter across borders and benefiting from arbitrage trading. Instead of the traditional system where capital is stuck going through slow, rigid banking routes, GC-Rig is building something more dynamic, a global liquidity network powered by partner entities around the world, which they call cash recycle bodies. The concept behind that is actually pretty simple. Think of it like this. Instead of money sitting still in one place, it's constantly being routed, shifted, and repositioned across different regions depending on where the conditions are most efficient. Now here's where it gets more modern. They're combining that network with AI-driven analysis, looking at things like exchange rates, liquidity, market conditions, and global demand signals in real time. So instead of just following one fixed path, the system aims to find smarter routes for capital movement based on what's happening globally in the moment. And whether you're deep into finance or just exploring how modern financial systems are evolving, GC-Rig alone is worth paying attention to, because that's where a lot of global finance is heading. Faster, more connected, more automated, and focused on consistent profit generation from arbitrage. Another big part of GC-Rig is scale. They're talking about hundreds of partner nodes across different countries, building out a kind of financial infrastructure that connects investors, institutions, and businesses into one flowing ecosystem instead of isolated systems. Now, obviously, anytime you're dealing with financial platforms like this, the important thing is to stay sharp. Big companies are exciting, and this one definitely sounds ambitious, but what really matters long-term is execution, transparency, and how something actually performs in the real world over time. So instead of treating it like hype, it's better to look at it as a concept in motion, one version of how people are trying to rethink global money movement, liquidity systems, and arbitrage trading. And honestly, whether you end up exploring it further or not, it does highlight something bigger happening right now. Finance is changing, and GC Rig is part of that shift toward arbitrage trading. Faster systems, smarter routing, global access, everything is shifting toward more interconnected models. And the best part is that they only charge a 1% withdrawal fee on every profit they realize for you. If you want to check it out yourself, you can find the link in the description below. If you're interested in joining my team directly, you can also contact me and ask for my referral link. I can personally recommend it based on my own experience with GC Rig. Just take a look and see what you think. No pressure. No assumptions, just explore it and understand it at your own pace. At the end of the day, the real advantage isn't just finding a new company, but understanding how these systems actually work. Now, let's get back to the topic. The community discusses HBAR with the vocabulary of a mature, widely held asset. The distribution data shows something still in early adoption territory, where meaningful positions are genuinely accessible. At today's prices in a way, they simply won't be if the institutional thesis plays out. Let's run through the full cure picture. From the top down, the top 0.01%, the untouchable tier. There's no single published number for exactly what puts you in the top 0.01% of HBAR wallets. And I'm going to be honest about that, rather than invent one. But we can reason toward it from what we know. If the top 1% threshold is 30,000 HBAR, and there are 9.78 million total accounts, then the top 0.01% would be approximately 978 wallets, based on the concentration data we have. Where whale wallets controlling 10 million HBAR or more grew 91.6% since August 2024, and wallets at 100 million HBAR or more grew 31.9%. The top 0.01% almost certainly starts somewhere between 1 million and 10 million HBAR. At today's price, $1 million HBAR is $92,300. $10 million HBAR is $923,000. These wallets belong overwhelmingly to exchanges, institutional custodians, the Hedera Treasury, and the earliest ecosystem participants, the Canary Capital HBAR ETF on NASDAQ, which has accumulated over $93 million in inflows since launch, likely generates wallet activity at this scale. The analyst coverage from May and June this year documented that roughly 3.42 billion HBAR were absorbed into whale wallets during the retail capitulation period. That volume, at today's prices, represents hundreds of millions of dollars of deliberate accumulation by entities operating at the top of this distribution. This is not a tier that retail investors build into at today's prices through normal accumulation. $1 million HBAR costs $92,000. It's an institutional and very early investor tier. The top 0.1% between the top 1% threshold at 30,000 HBAR and the top 0.01% at $1 million plus sits the top 0.1%. Based on the curve shape from XRP and XLM distributions, which both show steep power law behavior near the top, and from the on-chain concentration data available for HBAR, the top 0.1% likely sits somewhere between 100,000 and 500,000. HBAR at today's price. 100,000 HBAR is $9,230. 500,000 HBAR is $46,150. This is the tier where serious multi-year retail accumulators start to appear alongside institutional entities. Someone who found Hedera in 2020 or 2021 accumulated consistently at prices between 3 cents and 20 cents and held through the drawdowns could realistically be sitting in this tier without having deployed an enormous amount of capital. At an average entry of 10 cents, 100,000 HBAR costs $10,000 total. 500,000 HBAR at that average costs $50,000 total. The top 1%, 30,000 HBAR. This is the precisely published threshold from the March 2026 community data. And it's the one I want to spend the most time with because it's both the most verifiable and the most practically meaningful for people watching this video. 30,000 HBAR at today's price of $0.092. That's $2,769. $2,769 puts you in the top 1% of all HBAR wallet addresses. Let me contextualize that against other networks because the comparison is genuinely striking. XRP's top 1% is 46,323 XRP at XRP's current price of around $1.50. That's roughly $48,600. XLM's 1% is estimated in the tens of thousands of XLM, and at 20 cents, that's a few $1,000s, but the threshold is imprecisely documented. HBR's 1% at $2,700 is by a meaningful margin the most accessible elite tier of the three major ISO 20022 payment coins in terms of dollar cost of entry right now. $2,700, that's less than a month of median US take-home pay. That's the cost of a decent laptop, a last-minute flight across the country, or a month of modest travel. For that amount, at today's price, you are in the top 1% of HBAR addresses on a network that has processed $10 billion in real-world asset settlements, classified as a digital commodity by the SEC and CFTC in March of this year, and whose ETF has pulled in over $93 million in institutional inflows. That accessibility is either a once-in-a-generation window that closes as the institutional adoption story matures and more retail participants enter the ecosystem. Or it's a sign that the market is correctly skeptical about whether the enterprise activity translates into token demand in a meaningful way. Both readings of the data are honest, but knowing that $2,700 is the correct cost of entry for the top 1% is information that lets you make the decision for yourself rather than guessing. Now, let's run the price scenario math, because a threshold tells you half the story. The other half is what 30,000 HBAR actually is worth at different price points. At today's $0.092, $2,769. At $0.218, which is Binance Research's published 2026 average price target, $6,540. At $0.287, from July 2025, $8,610. At 50 cents, $15,000, the same number of tokens. At $1, $30,000, the same number of tokens. At $3, $90,000. That's the range. $30,000 HBAR at today's price is a month's take-home pay for many people. $30,000 HBAR at $3 is $90,000. Not a retirement, not generational wealth, but genuinely meaningful money that would move the needle on a real financial decision, paying off debt, a home deposit, a business seed. What makes this interesting as a comparison to the other coins is the starting cost. Reaching the top 1% of XRP costs nearly $50,000 at current prices. Reaching the top 1% of HBAR costs under $3,000. The gap is because HBAR's holder base is less developed, the price is lower per unit, and the network's retail adoption story is early stage. Whether that early stage status is a feature or a bug is the central the question of any HBAR thesis. The top 10% is 1,200 HBAR. At current prices, that's $110.76. $111 puts you in the top 10% of all HBAR wallet addresses. At $1 XRP, 1,200 HBAR is $1,200. At $3, it's $3,600. At 56 cents, the 2021 atmospheres, it was $683. The top 10% threshold at $111 is striking because it tells you something real about who the bottom 90% of HBAR wallets actually are. They're holding less than $111 worth of HBAR at current prices. They're shrimp in the most literal sense, positions that represent curiosity or accidental ownership, rather than deliberate, thesis-driven accumulation. This also means that almost anyone reading this video, anyone who's actually found HBAR through research, bought a meaningful position on purpose, and cared enough to look up this kind of data, is probably already in or near the top 10%. That's not because they're exceptional investors. It's because the baseline for top 10% is genuinely that low. Every time I present HBAR data, I want to be honest about the thing that doesn't resolve neatly, because I think it's genuinely the most important question for any HBAR holder: the value accrual mechanism. HBAR fees are priced in fixed USD terms, which makes enterprise budgeting predictable. Those fees flow to node operators and the Hedera treasury, rather than proportionally to HBAR stakers as income. The 2% annual staking yield exists and is real, but it comes from a dedicated staking rewards account, not from fee revenue growing proportionally with network usage. This means the relationship between network usage and token price is indirect in a specific way that XRP and XLM don't share to the same degree. On XRP, each transaction that uses XRP as a bridge asset creates direct demand for the token in the open market. On Stellar, each stablecoin settlement using XLM as the settlement token creates direct fee demand. On Hedera, enterprises can transact at scale, while the HBAR they need for those transactions can be acquired cheaply or subsidized in ways that don't necessarily create sustained open market buying pressure proportional to network volume. This doesn't mean HBAR can't appreciate significantly. It means the mechanism by which it appreciates is less directly tied to transaction volume than it is for XRP or XLM. It's more dependent on supply dynamics, on institutional capital deciding the token is worth holding as a strategic asset, on ETF inflows creating structured demand, and on the broader market's repricing of Hedera's enterprise positioning. Whether you're a top 1% HBAR holder or a top 10% holder, the honest question isn't, is my position going to go up? Nobody can answer that. The honest question is, do I understand the specific mechanism by which my position would need to appreciate, and do I believe that mechanism plays out? The rich list tells you where you rank. The value accrual question tells you what needs to happen for that ranking to matter. One more piece of context that I think makes the rich list picture genuinely more interesting than just the static percentile thresholds. During May and June of this year, the period when HBAR's price was at the most discouraging recent levels, on-balance volume data showed roughly 3.42 billion HBAR being absorbed into whale wallets. Large addresses were accumulating, while smaller addresses, the bottom of the distribution, were reducing exposure or exiting entirely. This is the classic weak hands to strong hands transition that precedes meaningful moves in asset cycles across multiple asset classes in multiple markets. It doesn't guarantee a specific price outcome or a specific timeline, but it does tell you that the entities with the largest positions, the ones sitting in the top 0.1% and above, were not selling during the period when retail was most scared. They were buying. And here's what that means for your specific position in the rich list. If you're sitting in the top 1% at 30,000 HBAR, or the top 10% at 1,200 HBAR, and you held for the same period that whale wallets were absorbing 3.42 billion tokens, you did the same thing the biggest hands in the ecosystem were doing. You stayed in while the pressure to exit was highest. That's not a guarantee of anything, but it is worth knowing. Let's make this concrete with a simple reference table. At today's price of $0.092, under $1,200 HBR, under $111, you're in the bottom 90%, most of the 9.78 million accounts on the network. $1,200 to $30,000 HBR, $111 to $2,769. You're between the top 10% and the top 1%. This is where a large portion of engaged, serious retail holders actually sit. $30,000 to approximately $100,000 HBR, $2,769 to $9,200. You're in the top 1% and building toward the top 0.1%. This is the tier that represents real, deliberate, multi-year accumulation at accessible price levels. 100,000 to 1 million HBR, 92,000 to $92,000, top 0.1% territory. You're in the genuine elite retail holder tier, the category where most of what sits above you is institutional or structural rather than individual. $1 million HBR and above, $92,000 and above, you're in or approaching the top 0.01%. The institutional early investor exchange custody tier, HBAR is the resource to check if you want to put your specific holding into a tier interactively. I'd recommend using it before you share your exact holding number with anyone online. The website specifically warns against this, and it's sound advice. Your tier is your business, but knowing your tier is information worth having. If getting this kind of honest, precise tier data for HBAR, instead of the community estimates and guesswork that have filled this gap for years, is useful too, you hit like on this one. It genuinely helps put this kind of source analysis in front of the people who need it. Subscribe if you want this kind of tracking going forward, because the tier thresholds are going to shift as more accounts activate. And as the institutional inflows through the ETF keep building, drop a comment and tell me which tier you're in and whether the top 1% threshold being under $3,000 changes how you think about your current position size. I want to see where people actually land on this. And if you know somebody who's been assuming they're a tiny fish in the HBAR ocean without ever checking what the actual threshold for the top 10% actually is, send them this video before they make their next accumulation decision. Without that information,